Good morning, ladies and gentlemen, and welcome to the latest edition of Tech Talk. It is Wednesday, the 21st of March, 2018. My name is Chris Conway. I'm the Chief Market and Trading Strategist here at Australian Stock Report. Before we get into the charts, as we always do, we'll take a quick look at the disclaimer. It essentially says that this presentation is general in nature only, that before acting you should take into account your personal financial circumstances. Of course, any discussion regarding performance is not indicative of future return. If you'd like to read the disclaimer in full, please pause the video now. Okay, we'll start as we always do with the Aussie 200 forwards. And I've just highlighted on the daily chart there something that I highlighted in yesterday morning's report notification, or in fact it was Monday's, pardon me, and that's that triangle, that pennant pattern that is forming on the ASX 200 chart. It's more prevalent on the 200 physical market. Obviously, we're looking at the SPY at the moment, but you can still see it there. And generally, these sort of patterns are continuation patterns. But what I mean by that is that the market will, grind sideways, and then once this pattern is broken, it generally breaks in the market in the direction that the market came from. So we were bullish leading into it, as evidenced by that uptrend there. We go sideways for a bit, and as I said, as the textbooks would tell us, theoretically we're expected to break out to the upside, and that would synchronize nicely with a nice push through 6,000 on the SPY. This sort of sideways grinding pattern where the range continually narrows highlights that neither the bulls nor the bears can gain the ascendancy at the moment. And ultimately traders and investors don't really know what to do. And if we look more broadly at what's going on at a macro level, and I'm sure we'll talk about this more later on in the video, there's a lot of moving parts in the global economy at the moment. So you've got Trump sending out tweets and talking about implementing tariffs and the talk of trade war. You've had recent things like what happened in Italy with the election that was a stalemate. You've got all these global macro risks set against a backdrop of synchronized global growth. The big one, of course, and we'll talk about this more a bit later, is the FOMC tonight, early tomorrow morning, our time, and what the Fed's going to do with regard to interest rates. So lots going on at the moment, but yeah, we'll pivot back now to the technicals. Let's have a look at the Aussie 200 forwards on a hourly chart. It's currently 10:15. The market has just opened. I said this morning that I wouldn't be surprised to see resistance at 59.50. And there's resistance all the way up to 59.80. Just from this early move, it doesn't look like we're going to get too far past that 59.50 level today. And I had said that perhaps being a seller, sort of up in this zone here, targeting moves back to sort of 59.40 would be the way to scalp some points if the opportunity presents itself. But really sort of sideways more than anything else there, and plenty of resistance above the current market price. Alright, we'll move on now to the Aussie dollar. That has been a big mover of late, breaking down. And let's just have a look at this trend here. So there's your high, low, lower high, lower low, lower high, and a lower low has been created as the Aussie is broken down once more. Now again, just thinking about what the Fed's likely to do tonight, there's likely to be a 25-point rate hike. That's widely anticipated. It's almost a foregone conclusion. So that will again narrow that interest rate differential between the US interest rates and Australian interest rates, and it makes the US dollar more attractive. So people are more likely to be buying the US dollar, less likely, or indeed, in fact, more likely to be selling the Aussie dollar, and that's likely to put further downward pressure on what we see here. Now, the big moving part tonight with what the Fed might do is the dot plots, and that's the forward-looking indicator of what Fed officials think will happen with interest rates over the next 12 months. So currently the dot plots suggest another 3 rate hikes over the next 12 months. If they change that language and they change that outlook, and that's really the conversation tonight, that's the big moving part, is whether they change that outlook from 3 to 4. So whether they anticipate that the health of the health of the US economy is strong enough such that they will need to raise rates faster than they have previously thought. Now, if they change that language and if they change that dot plot, that will cause billions and billions, if not trillions of dollars to need to shift, because everyone out there, traders, investors, big hedge funds, even government economies will have to change their risk profile slightly. And it's likely to have reverberations throughout the global economy. So it's not an insignificant thing that is going to happen tonight. I wrote a little article this morning, my morning rant in the report notification, again saying that I don't think that they're likely to change that dot plot, and that's because of something that has happened recently, and that is, the escalation of trade tensions now that the US has imposed tariffs on certain countries with regard to steel. This is a recent development. Trump was talking about it for a while, but recently he's actually done it. And there's further talk this morning that the US is set to go again and place further tariffs on imported goods. So that has the potential to spark a trade war. Now, the Fed will not want to upset either the US economy or the global economy, and this recent development of tariffs and a potential trade war is exactly that. It's a recent development. So I think the Fed will want to err on the side of caution. I don't think they're going to want to upset anyone. I think they're going to say something along the lines of this, given this recent development, given the changing trade dynamics between the US and the rest of the world, we don't think it's the right time to be saying that we're going to raise rates faster than previously thought. So that's my 2 cents. Could be wrong. We'll see what happens tonight. So just technically bearish on the Aussie dollar. I don't see why you'd buy this one. The next downside target is really these lows down here, sort of the 75.30 level. So there's a couple of cents in it there for anyone who wants to take on the short risk. Moving along, euro dollar, really just grinding sideways. Again, this will be impacted by what happens tonight with regard to the Fed. The cable looks more constructive. So this is the British pound versus the greenback. Price action has sort of just been hovering around this 1.4 handle, but that's sort of a basing pattern there. More inclined to be a buyer of this one, targeting move back up to the recent highs, but again, anything could happen tonight with regard to the greenback. And finally, the dollar yen is the one that we have a look at. So big downtrend here. I would be looking for this one to retrace back up to this 108 level, and if you saw a sales signal up in this region here, then you'd be a seller looking to target a move back into 105. But again, the big caveat is wait to see what happens tonight. I don't see why you'd take on risk ahead of, as I said, was just explaining what could be a very significant outcome with regard to what the Fed does and what they're likely to do in the future. Regional markets now. First up, the Nikkei. Very clear level there, sort of at 21,000. Coming under pressure again. Not really anything doing on this one for me. Look, the EMAs are pretty tightly packed together, and that's really sideways. But that big level there, if it was to be retested again, you got another signal like that, or a pin bar like that, then that might entice some buying down at that level. But that's what you'd be on the lookout for. Hang Seng now. I've drawn this this line here, just highlighting what is really the 32,000 level. You could be a buyer on stop, sort of probably 32,050, targeting a move, back up to the recent highs around 33,500. So that's potentially 1,500 points there. Obviously, you'd have a 600 or 700 point stop loss, down in here somewhere, just below that recent support. So there's a potential long opportunity there on the Hang Seng for, again, anyone who's willing to take on the risk. To European markets now, more specifically the DAX. Let me just bring up the chart. There it is there. This one's, it's a little too messy for my liking. That's a big range there. Not really a whole lot going on. So that's a pass for me in terms of trading opportunities. Sorry, I didn't mean to show you the crude chart there. I meant to show you this one. The S&P 500 in the US. Again, really just grinding sideways. And again, whilst the greenback is the thing most likely to be affected significantly by the Fed's rate decision tonight, US markets will be, and indeed global markets will be as well. So again, just wait to see what happens tonight. There's no need to take on or force any risk at the moment ahead of what is a big event. To commodities now. There we go. We can have a look at crude. Anyone who's been watching these videos over time will know that I'm very constructive on oil. I think there's a lot of upside to go. I don't think we've seen oil's best days, and that's because of the supply and demand dynamics in that market. So again, just to reiterate, we've got supply side restrictions with OPEC limiting production, and the Saudis agitating for extending those production cuts out to 2019. So you've got supply side restrictions, and then on the demand side, we all know that global growth is picking up and demand for oil therefore should pick up as well. So it's economics 101. It's the old supply and demand equation. When you've got less supply of something and more demand, ultimately prices can only move in one direction. And as I said, as much as they have moved higher already, I think they still have further to go. 70 is the target, but I wouldn't be surprised if at some point this year we're talking high 70s, or even potentially a price with an 8 in front of it. So yeah, if you're targeting 70, you could be a buyer. Even right now, there's $6 in it, which is 10%. About 10% upside from where we currently sit, slightly less. So bullish on oil. Looking now to iron ore. This has sold off quite drastically recently due to some demand concerns out of China. The Chinese property market has been weakening of late, and that's causing a stockpiling of steel rebar futures. Of course, steel rebar is very heavily consumed by the Chinese construction sector. So you've got a weak property market. They're not consuming as much steel rebar. Therefore, there's not as much demand for iron ore. Of course, iron ore is the primary product that goes into making steel rebar. And so you've seen that price come off. Again, it's supply and demand. It's economics 101, supply and demand. Demand for something has gone down. The supply levels haven't changed, and therefore the price has to fall because not as many people want it. Very simple. When you peel back all the layers, it all just comes back to, as we all know, supply and demand. And so, look, technically, I certainly wouldn't be buying this one. I wouldn't be trying to catch this falling knife. But there's your support level there. So it's still got a potentially a little bit more downside to go before you see some technical buyers step in. Finally, gold. This one's pretty straightforward. Looking to buy support down in this 1300 level. It hasn't been testing 1300 perfectly, so that might be, or where we are now might be as low as it gets. But you'd be looking for, a candle like that, followed by a confirmation candle. It didn't quite happen there. There was one there, and then it took a few more days before the confirmation. But you'd be looking for a nice pin bar, bit of confirmation, and then targeting back up to 1350, 1360. So a potential long opportunity there on gold as well. Alright team, that wraps it up. Thanks for watching, thanks for listening. I hope it was informative, and I'll try and punch out another video a little bit later in the week. Until then, take care. Thanks.